Okay, so this is something that I think is on a lot of people's minds these days. Is China headed for like a Japan-style lost decade economically? We've got a ton of articles and reports on this, which is great because it's definitely not a simple question.
Yeah, and what's interesting is, people are drawing all these comparisons between China's economy right now and what happened to Japan back in the 1990s. But to really understand what might be going on, we really need to break down the similarities, differences, look at what the experts are saying, figure out what to watch out for.
Yeah, totally. And before we dive into all the details of what's happening with China right now, can you just take us back and remind me what exactly happened in Japan that led to their lost decades? Like what went wrong?
Well, in the 1980s, Japan's economy was absolutely booming. They had incredible growth, asset prices, like real estate stocks were going through the roof. It seemed like nothing could stop them.
They were kind of like the envy of the world, right? For a while, at least.
Yeah, for a while. But that rapid growth, it turned out it wasn't totally sustainable. It led to this massive asset bubble. So think of it like prices getting inflated way beyond what they were actually worth.
Ah, okay.
And when that bubble finally burst in 1990, it was like a chain reaction.
Okay, so like dominoes?
Yeah, kind of like suddenly asset prices plummeted. Banks were left holding all these bad loans because people couldn't pay them back. Businesses got really hesitant to invest. Consumers started to worry.
So their economic miracles just kind of like went poof.
It basically turned into a cautionary tale.
Wow. So now fast forward to China today. People are saying we're seeing similar warning signs. Are they overreacting, or is there actually something to that?
Well, there are definitely some parallels. Just like Japan, China had decades of just remarkable growth, but that growth has slowed down a lot in recent years. And they're also dealing with a correction in their property market, which basically means prices are falling after this huge run-up they're facing, mounting debt deflationary pressures. And just like Japan, their population is aging rapidly, which can make it harder to grow the economy.
So on the surface, it does sound kind of similar, right?
Yeah, it does. And I think both Japan and China kind of went through these boom-bust cycles, largely fueled by, pouring tons of money into things like infrastructure projects and real estate. Like it's almost like this classic economic pattern. Too much money chasing too few good opportunities.
Okay, so they both went through this boom and bust, and now they're dealing with the aftermath, but I'm guessing it's not quite that simple. What are some of the key differences between what Japan faced back then and what China's dealing with now? I mean, it is a different world, right?
Oh, absolutely. It's really important to remember that even though there are similarities, China in 2024 is not the same as Japan in 1990. The global context is different. Their economic structures are different, and their policy approaches are different.
So even though there are some echoes of Japan's experience, we can't just assume China is destined for the same thing, right?
Exactly. And one of the biggest differences is that China's economy is still growing. Even though the pace has slowed down, in 2023, their growth was around 5%, which is significantly lower than, their previous double-digit growth, but it's still much better than the near zero growth that Japan experienced during their lost decade.
Okay, so that's a big difference right there. China's economy is still expanding. It's not contracting like Japan's did.
Exactly. And there's some other key differences too. China has more control over its currency, which gives them more tools to manage their economy that Japan didn't really have. They also have a younger population, though it is aging rapidly, and their government is much more willing and able to intervene directly in the economy.
So it sounds like China might actually have some advantages that Japan didn't. Yeah, but let's go back to the similarities for a second. You mentioned this issue of debt overhang. Can you explain what that is and why it's such a big deal for both Japan and China?
Sure. So debt overhang basically happens when individuals, businesses, or the government have borrowed too much money and it starts to become a drag on the economy. Imagine you took out this huge loan to build a factory, but then demand for your product just dries up. Now you're stuck with this factory you don't need and a massive debt you can't repay. And that's essentially what happened in both Japan and China on a much larger scale.
So all that investment during the boom years has basically come back to bite them.
Exactly. And that mountain of debt, it just weighs heavily on businesses. And the government, it makes it harder to invest in new things that could actually help stimulate the economy. It's like trying to run a race with, a heavy backpack on.
And to make matters worse, you mentioned those deflationary pressures. How does that fit into all of this?
Well, deflation is basically the opposite of inflation. It means prices are falling instead of rising. And while that might sound good at first, it can actually be really bad for the economy.
Why is that? I mean, cheaper stuff sounds good to me.
Well, think about it this way. If people expect prices to keep falling, They're going to hold off on buying things right. They'll think they can get a better deal later, and that leads to weaker consumer demand. At the same time, businesses have all this excess capacity, meaning they can produce more than people actually want to buy, so they have to lower prices to try to sell their stuff.
And that just kind of makes the deflationary spiral worse, right?
Exactly. Lower prices lead to lower profits for businesses, which can then lead to job losses and even weaker demand. It's this vicious cycle that can be really hard to break out of.
So we have this combination of factors, right? A slowing economy, this huge debt burden, and deflationary pressures that are raising concerns about a potential lost decade for China. But you also mentioned that China is actively trying to learn from Japan's mistakes. Or some specific examples of that.
Well, one key lesson that China seems to have taken to heart is the danger of what economists call zombie companies. These are basically businesses that are kept alive by government support or, easy loans, even though they're not really viable in the long run.
So they're kind of like the Walking Dead of the business world.
Yeah.
Just dragging down the economy but refusing to die.
Yeah, exactly. And Japan, they spent years propping up these zombie companies, and it really ended up prolonging their economic stagnation. China, on the other hand, seems to be taking a more pragmatic approach. They're allowing for more creative destruction, which basically means letting some businesses fail so that those resources can be redirected to more productive areas of the economy.
So they're being tougher on businesses. They're not just throwing money at the price, which is an interesting contrast to how Japan handled it.
Yeah, it is. And it suggests that China might be willing to accept some short-term pain to avoid, the kind of long-term economic malaise that Japan experienced.
Mm-hmm. Okay, so that's one way China is trying to learn from Japan's missteps. But what about their actual policy responses to the slowdown? Are they making the same mistakes that Japan did, or are they trying something different?
Well, let's start with monetary policy. So that's basically how the central bank manages the money supply and interest rates to influence the economy. Japan's central bank was actually quite hesitant to lower interest rates during their lost decade, and that actually made things worse because it stifled lending and investment.
So they were basically choking off their own economy.
In a way, yes. And China, on the other hand, has been much more proactive. They've cut interest rates multiple times to try to stimulate lending and boost economic activity.
So they're trying to keep the money flowing, which seems to make sense.
Exactly. And they're also managing their currency, the yuan, more strategically than Japan did with the yen. You remember how Japan's strong yen actually hurt their exports during their stagnation?
Right. It made their products more expensive for overseas buyers.
Exactly. Well, China has been allowing the yuan to depreciate gradually, which makes their exports more competitive and could help offset some of those deflationary pressures we talked about earlier.
So they're using their currency as a tool to try and support their economy. Pretty clever.
It is, but managing that depreciation carefully is crucial, right? If the yuan falls too quickly, it could spook investors and lead to capital flight, people pulling their money out of China because they're worried about further depreciation. So it's a delicate balancing act.
Okay, so China's being more proactive on the monetary policy front. What about fiscal policy? That's the government's use of spending and taxes to influence the economy. Remember those massive infrastructure projects that Japan poured money into during their lost decade? Some people call them bridges to nowhere. Is China doing the same thing?
Well, they are using fiscal stimulus, but it seems like they're being more targeted and cautious than Japan was. They've increased spending on infrastructure, but they're also focusing on things like renewable energy, social housing tax cuts for small businesses.
So they're trying to invest strategically in areas that could have a longer-term impact, not just throwing money around.
That's the impression I get, and they're also being careful not to add too much to their already substantial debt burden. It's a tough balancing act, trying to stimulate the economy without creating another debt crisis down the road.
So China is trying to learn from Japan's mistakes in terms of both monetary and fiscal policy, but what about structural reforms? Yeah, those deeper, more fundamental changes to the way the economy actually works. This is where Japan really struggled, right?
Yeah.
They were slow to adapt and address some of the underlying problems in their economy.
You're absolutely right. Structural reform is often the hardest part because it can involve challenging powerful interests and accepting short-term pain for long-term gain. And yes, Japan was notoriously slow to implement meaningful structural reforms, which definitely contributed to their prolonged stagnation.
So is China doing any better on that front?
It's a mixed bag. They
No.
know they need to transition from an economy that's heavily reliant on investment in exports to one that's more driven by domestic consumption.
Because relying too much on exports makes you vulnerable to global economic shifts.
Right.
Exactly. And they've made some progress in areas like, reducing overcapacity in heavy industries and trying to curb speculation in the property market. But there are also concerns about, their crackdowns on big tech companies and tighter control over the private sector.
It sounds like they're sending mixed signals.
They are, and that uncertainty makes it harder for businesses and investors to have confidence in, the long-term direction of the economy.
Okay, so we've talked about what China is doing domestically, but we can't ignore the elephant in the room, right? Yeah. The global context. Huh? How does the current global environment impact China's economic outlook? And how does that compare to what Japan faced during their lost decade?
That's a critical question. Remember, Japan's stagnation happened in a very different world. They were a close ally of the United States, and even though they had some trade frictions, they didn't face the kind of geopolitical tensions and trade wars that China is dealing with today.
Things have definitely gotten more complicated on the global stage.
They have. China's rise has been met with this mix of admiration and anxiety, particularly from the United States. We're seeing this growing rivalry play out in areas like trade, technology, security, and that creates a lot of uncertainty for China's economy.
So let's unpack that a bit more. What are some of the specific challenges that China faces in this current global environment?
Well, for starters, China's export-driven growth model is facing some serious headwinds. They've been the factory of the world for decades, but now they're dealing with rising trade tensions, particularly with the U.S. Those tariffs imposed during the trade war are still in effect, and there's this growing movement to diversify supply chains away from China, especially for strategically important goods like semiconductors.
So the world is becoming less reliant on China for manufacturing.
Yeah, and that's a challenge for them because their economy has been so dependent on exports. On top of that, global demand has been softening in recent years. We've seen slowdowns in major economies like the US and Europe, and that's putting downward pressure on demand for Chinese goods.
So it's not just about trade tensions, it's also about the overall health of the global economy.
Right. And then there's the issue of foreign investment, which played a huge role in China's economic rise. Multinational companies poured money into China, building factories, creating jobs. But we're seeing a shift now.
Are companies pulling back from China?
Yeah, foreign direct investment into China has been declining since 2021, and we actually saw a record net outflow of FDI in 2024. This means more money is flowing out of China than into it.
Wow, that's a pretty stark reversal.
It is. It seems that companies are getting spooked by the rising geopolitical risks, the increased costs of doing business in China, and a perceived lack of transparency and predictability in China's regulatory environment.
So it's not just about economics, it's also about politics and perceptions of risk.
Exactly. And that uncertainty makes it harder for China to attract the foreign capital it needs to keep its economy humming.
Okay, so trade tensions, slowing global demand, and declining foreign investment, those are some serious challenges. But you mentioned earlier that China has some advantages that Japan didn't have during their lost decade. Do those advantages still hold up in this more complicated global environment?
That's the million-dollar question. While it's true that China has more control over its currency and a government that's more willing to intervene in the economy, those advantages might not be enough to fully offset the negative impacts of these global headwinds.
So it's like a tug-of-war between internal strengths and external pressures.
Precisely. And it's impossible to say for sure which side will win.
Okay, so let's get to the heart of the matter. We've analyzed the similarities and differences between China's situation and Japan's lost decades. We've looked at China's policy responses, and we've factored in the global context. Well, what's the verdict? Is China headed for a lost decade, or can they avoid it?
Well, as you might expect, there's no simple answer. Expert opinions are all over the map. Some are quite pessimistic, arguing that China is on the brink of a prolonged period of stagnation. They point to the debt overhang, the property market woes, the deflationary pressures, and the increasingly hostile global environment as evidence that China is heading down the same path as Japan.
So they basically think history is repeating itself.
Right. But then you have other experts who are more optimistic. They acknowledge the challenges, but believe that China has some unique strength that will allow them to avoid a lost decade. They emphasize China's continued growth, even if it's slower, their ability to manage their currency, their relatively younger population, and their government's willingness to intervene in the economy.
So it's a battle between the pessimists and the optimists.
Exactly. And then you have kind of a middle ground. These analysts acknowledge the risks, but don't believe China is doomed to repeat Japan's experience exactly. They point out that China is actively studying Japan's mistakes and trying to learn from them. They also highlight the fact that China's government has a wider array of policy tools at its disposal than Japan did.
So saying China's in a tough spot, but they're not helpless.
Right. Their view is that China's growth will likely slow down significantly, perhaps settling in the 3–4% range over the next decade, but they don't see a complete collapse.
So a slowdown, but not necessarily a lost decade in the same way that Japan experienced it.
Exactly.
It sounds like there's still a lot of uncertainty about what the future holds for China's economy. Right? But what does this all mean for our listener? Why should they care about all this talk of lost decades and economic slowdowns?
Because China's economic trajectory has profound implications for the global economy and ultimately for everyone's lives. China is a major player on the world stage. They're the world's second largest economy, a major trading partner for many countries, and a significant source of investment capital. What happens in China doesn't stay in China.
So a slowdown in China would ripple through the global economy, affecting everything from commodity prices to stock markets to job prospects.
Absolutely. And it could also have geopolitical implications. A struggling China might be more assertive in its foreign policy, which could lead to increased tensions and instability in the world.
So it's not just an economic story, it's a global story with potential consequences for everyone.
Exactly. And that's why it's so important to understand the dynamics at play and to pay attention to how things unfold in the coming years.
Well, I think we've given our listener a lot to think about today. It's a complex situation with no easy answers, but as you said, it's a story that we all need to follow closely. Thanks for joining us on this deep dive. We'll be back next time with another fascinating topic.